Okay, ladies and gentlemen, good morning to the morning briefing with your host, Tony. Let's start off the day just talking about OPEC and their allies. Of course, they're meeting at 10 a.m. Eastern Time via a video conference. Now, what we're seeing here is that the markets are talking about a potential of a 10 million barrel per day cut, and that, according to the CNBC article that we're looking at now, saying that that would not be sufficient, and we would still require necessary price-induced shut-ins on top of such voluntary curtailments. Uh, so what we understand from here is that with the cuts that we would have, or potential cuts, it still won't be enough to fill the oil gap between the number of people that are looking to buy oil. That demand has fallen off. So 10 million barrel per day cut, people are saying that that's not enough. You're also getting that talk from Goldman Sachs and also from SEB as well. So some analysts was also saying that that's not going to be enough. Now, from the US's point of view, well, they haven't mentioned any specific figures from their side, but we'll get into that a little bit later. Now, just a bit of talks about certain amounts of cuts that could possibly be made by, let's say, Russia or Saudi Arabia. So Saudi Arabia, let's start off with them. They're looking to make there's some rumors going around. They're looking to make a 3 million barrel per day cut. And then also on the Russian side, now here's the thing. So the Russians were expected, or were going to be expected, to cut production by 2 million barrels per day. But the Kremlin today, they declined to comment on the Reuters report that Russia could agree to its oil production cut by 2 million barrels per day. Also, just some other news as well, just to keep on your toes. So we had some early news from the Kremlin telling Reuters that Putin had no plans to talk with US's Trump or Saudi Arabia about oil today. So again, this is it's going to be quite difficult to see how they're going to discuss this with the Saudis if they're going to have a video conference today at 10 a.m. Eastern Time. That's going to be quite interesting to see how the Russians play that. So that's a bit of an odd headline that's come out there. Now, one thing that I want to show you with the oil glut and the demand falling, let's just have a look at this graph from the EIA themselves. So if we can see here this image of, or this line chart, this line graph that we can see with charts as well. This is where we currently sit at the moment. So world production, we currently have seen huge drop off in the demand. So we're producing at around 100 million barrels per day worldwide, and the demand has fallen close to 90 million barrels per day. So 10 million barrel a day cutoff. Now, they could say, the Saudis and OPEC could say, yep, a cut for 10 million barrels per day for maybe a couple of months will be fine, but we don't know that yet. The USA hasn't been completely hit, or they haven't reached their peak, as to say, with the number of coronavirus cases and also the mortality rate. So production-wise and industries in the USA using oil, that demand is still going to continue to fall off as this gets worse. We also haven't reached any peaks. Not all of our peaks have been reached within Europe as well. I mean, in the UK, and we'll go into it further, the UK is still seeing an increase in the number of cases and also the mortality rate as well. But again, the global oil demand, this glut that we're seeing of extra oil being created, this is going to be for the foreseeable future, for the next 2 to 3 months. So these countries still need to recover after they've battled with the coronavirus. They still need to recover. So doing a 10 million barrel a day cut for the next 3 months. Okay, fine. Initially, you'll get some confidence being put in to WTI crude oil. Just taking a quick look at WTI crude oil, I'll just bring up the charts for you. And this is the reaction that we can see at the moment on WTI. So as we got comments, let's grab it up here. So as we got comments from the Kremlin saying that Putin has no plans to talk with Trump or Saudi Arabia about oil today, we're seeing a bit of a downward movement. This is on an intraday chart, so just keep that in the back of your mind. We're seeing a negative reaction from WTI crude oil. So this is where we got the news at around this time here. We'd have around 12 past 7 is where we got the news. We could see, this is where we can see some negative ticks coming in on WTI crude oil off the back of that news from Trump not wanting to, or not making any plans to meet the Saudis or Trump or discuss oil with Trump or the Saudis. Okay, so as we're continuing to look at this negative reaction on WTI crude oil, this is much worse than expected. So now WTI crude oil is falling down 3%. Now it's going into a free fall here at the moment. So I think we're going to just be careful of these swings. That was going to be my next comment of in the market. These rumors and also comments coming from OPEC and non-OPEC countries, particularly Russia and Saudi Arabia, this is the kind of market reaction that it's going to cause. So we've seen yesterday, we did see a surprise jump in WTI crude oil, which was quite late. We had some people say from the headlines that Algeria's oil minister was talking about there being positive talks and there's going to be a huge cut made by OPEC Plus, but we're not seeing. But now that whatever that reaction was, that's it looks like it's going to be stripped away. This is what we see. This is what we're seeing in the moment. So oil is now down. Well, it did go down 4%, so it's going to be quite choppy. Right. Okay. So be careful of that. That's not nice. Okay. Let's go back to some of our live scenes as well. Let's have a look at some of our headlines. Okay. So other than OPEC having to meet the demand or meet the no demand of countries not wanting oil, 3 months may not be the perfect idea or timeline. These countries need to recover, and there'll be huge demand for oil coming out. So the prices, there needs to be that constant stability. If these countries start to just buy up oil as they come out of quarantine or lockdown, it's just going to inflate WTI crude oil or crude oil prices in general to quite a significant amount. So they need to gradually stabilize the oil market just to make sure that the prices are at the right price. Companies don't go over. There isn't an over demand for oil, and that the demand for oil is controlled, basically. So countries can recover quickly, but at a safer rate. So we potentially would look for oil, well, in the positive sense, oil demand, oil being cut for at least 5 to 6 months, or maybe even more, possibly towards the end of the year. This is going to leave quite a negative effect, and it already is, on economies worldwide, particularly for the US. Now, if we go to another article, also from, let's have a look at this Reuters article. So US weekly jobless claims are seen hovering near record highs. The number of initial claims for state unemployment benefits probably slipped to seasonally adjusted 5.250 million for the week ended April the 4th from 6.648 million, according to Reuters survey of economists. Now, do expect these numbers to be quite high coming out of the US, of course, and this is something that the markets gotten used to. We've seen reactions from last week's initial jobless claims report. When that came out, there wasn't too much of a reaction from the markets. A lot of it was already priced in. So don't be surprised when if the market has already priced in initial jobless claims already. So if we just have a look at the dollar, I'll just bring that up for you guys on here. So on the dollar, or if we're looking at the USD JPY, not too much movement from the dollar here as of yet. Only from only yesterday we had some movement around 9 a.m. Eastern time, but not too much here. Again, on a minute chart. So just keep that in the back of your mind. Economic releases, although they are quite important, particularly initial jobless claims and NFP, to keep in the back of your mind. It's serving more as as part of a structure that is part of this narrative, a little cog that's part of this coronavirus narrative. So now it's more just down to comments from governments, particularly Trump and also China. But then you've also got OPEC comments as well to look out for. Those are the things that are moving the markets more than economic releases over this whole coronavirus shambles that we can currently see going on within the US and also with OPEC as well. That's also shambles as well. Okay, let's go back to another headline as well. So if we go to the next one. Okay, so from a Politico article, unemployed are still waiting for checks as states struggle to pay out stimulus funds. Less than half of the money for administrative costs in the most recent stimulus bill has been distributed to states, according to the Department of Labor officials. So if I just bring that up a little bit up here. Now, but even once they have the full amount in hand, states say they will need even more money to overhaul antiquated filing systems, and they also require more details and guidance from the Department of Labor to allow them to streamline claims and cut benefit checks faster. What they're saying here is that they're receiving the money, but it's even if they receive the full amount of money from the government or the federal government, it's still not enough. Because there are so many people applying for initial for jobless claims at the same time, it's overwhelming these states, and they're having to try and keep that demand or keep up with the demand for the amount of checks that are required. So don't forget, $1,200 per American citizen is what was promised. So this $2 trillion stimulus package by Congress and the U.S. administration. Don't forget about that. So what we're seeing here from this article as well, for now, unemployed workers are left waiting for checks at the states as the states struggle to handle a volume of unemployment applications unprecedented since the US started tracking jobless claims since 1967. This is going to be an ongoing thing. For socially, it's not going to be great. Market reaction, we're not seeing too much of a market reaction from here. It's more about at the moment. I mean, we're not seeing any drastic reaction. Markets more likely expecting there to be some issues with states dealing with or struggling with paying these people all at the same time. That makes common sense. You can't pay everyone all at the same time if you've got millions of people applying for jobless claims. That it just doesn't make sense. So you need to try and combat that effectively. So again, as I said, markets not really doing too much for particularly on the dollar as of yet, although there does continue to move towards the downside. If I just grab the Dixie. Okay. So it is kind of holding itself a little bit, not too much. If we're just comparing it to our highs of 2017, this is where we currently sit at the moment. Not too much movement or drastic movement as of yet compared to what we had in at the beginning of March, and around March, and then towards the end of March as well. Not too much of drastic movement going on, but this is we can kind of see on the dollar, not too much reaction as of yet. Things have kind of quieted down in the markets for now. Okay, going to another article. So, those of you who are in the UK, it just makes sense that the UK would go into a further lockdown or extend their lockdown measures. So you have from the Guardian article, UK coronavirus lockdown likely to be extended, says the Culture Minister Dowden. He says, I don't think it's very likely these measures are going to be changed, given they're just starting to have an effect, as we said, but we would revive them. As he's told the BBC Thursday morning. It's only prudent that on an ongoing basis we review them after 3 weeks. Again, so not it is significant news for the UK as a whole. Market wise, if you're looking at if you're trading the cable, this is where we currently sit at the moment on the cable. Again, not too much reaction from the cable. This is on an intraday chart. If I just bring up on a higher time frame. We just got some key levels, key levels to test. Level of resistance at around here that we have 1.25 as a level of resistance. We're kind of holding steady at the moment. So things are just slowing down. We're not seeing. I mean, we did see a bit of a. We have seen a rally on the pound, but again, that's kind of been halted and trading within the range of around 125. And 1.22 and around those handles there. Okay, and there's finally, just go to another one here. So finally, so today, Jerome Powell, the Fed Chair Powell, is going to be talking about COVID-19 and the economy as well. So he'll be talking about the current state of the economy, the Fed's response to the crisis, at 10 a.m. Eastern time, and he will also be taking questions from the audience as well. So just keep that in the back of your mind. We will be covering that as well. It is going to be quite a hectic 2 days, or the hectic end of the week. Even though we have Good Friday tomorrow, it's going to be still have the G20 meeting, so we're still here. But it's going to be quite a hectic week or end of the week with OPEC, Fed's Powell, and also the G20 meeting tomorrow as well. Okay, that is your morning briefing. Thank you for listening. Don't forget to subscribe. Keep up to date with when we go live, and do share our content. And I will catch you later. Thank you very much.